When I hit record today, Tesla was up more than 140% in just the last 6 months. But the new administration might be looking to change that, and it might not be for the greater good of this stock. And that is because they said they're looking to take away that EV credit. So what could that mean for a company like Tesla? Is that going to help the company, hurt the company? And what does it mean for investors? Could it come down at a discount for us? If you have it, should you sell it? And a bunch of other questions that we should be asking right now. Let's go ahead and break it down. Now, as I mentioned at the very beginning, the incoming administration has said on multiple occasions that they're looking to take away the EV credit. This is the electric vehicle credit. I want to take a little bit of time to explain the entire scene here, because this involves not just Tesla, but the entire EV market. It takes into account a little bit of international economics, and trust me, it is just a little bit, because I'm not going to take too much time there. And then a little bit of supply and demand when it comes to that as well. So first, the EV credit. What is it? Right now it's $7,500. Consider it a discount, just to make things super simple. The most recent iteration, the most recent version, was in the Inflation Reduction Act. That was a law passed maybe a year or 2 years ago. You can look up what year. In either case, if you go to a dealership and let's say, for example, as a buyer, right, you have a bunch of options. You can get a bunch of new vehicles, right? But you want something that's brand new. You get a gas-powered vehicle and an electric vehicle. And you can use that EV credit, not just for Tesla, but for anything, any electric vehicle. Now, if they are priced the same, you are likely, especially if you're watching this channel, you are likely going to get the one that is less expensive. So you are going to use that EV credit to bring down the price by roughly $7,500. You want to use that credit and buy the one that is less expensive. This is what is called, at the end of the day, a demand credit. You are increasing demand for a particular product. This has been the lifeblood of Tesla in the early stages. Keyword, in the early stages. Now, we have had some version of this credit since 2009. Now, I am emphasizing that for a specific reason, because at the time I'm recording this, it is 2024, okay? Times have changed. Times have changed for Tesla. Times have obviously changed for the stock market and a lot of things in between. The reason why that is important is because yes, the administration is changing over, and also the tax laws, that is changing too. And this is something that I did bring up as a potential risk and something that we should be aware of when it comes to the stock market. That means that not only is this new administration could set a bunch of things in motion in terms of what they may want to do and how that can impact the stock market, but changing the tax laws can impact the stock market. And one of the things they can do is say, look, we don't want to incentivize people to buy EVs anymore. If that's the case, could that hurt a stock like Tesla? Elon Musk says no. And I think Elon is right on this one, which should not shock anyone. This kind of is his thing. Now, buying a social media company, maybe not. But running an electric vehicle company absolutely is. And here's the thing. I thought going into this, before doing almost an hour's worth of research, yeah, this should reduce demand and make people not necessarily want to buy. However, what it does do is actually kick out any competitors. Think Rivian, Lucid, Mullen Automotive, if they're still alive, or whatever smaller EV players here. If they don't have the help that Tesla did back in 2009, right, they are just now getting started for the most part. But this isn't 2009 anymore. We're in 2024. If they cut that EV credit and they don't have the same runway that Tesla did, and we don't have right, we don't have the same opportunities to buy those cars at the same discounted rate, they may not survive long enough to get to Tesla levels or get to the point where they can produce those cars profitably without these credits anymore, which just leaves Tesla and almost no one else. I say almost because Ford will still exist, GM will still exist. Are they going to be formidable foes? Probably not, but that is the point here. So that is going to be perhaps the end game here is, yeah, let them expire, and that's actually going to be better for Tesla in the long run if it does expire to begin with. Because, but remember, this is a congressional thing. It is going to be tax law, which means that Congress has to sit here and fight about it and argue about it. Though, also remember that it is all controlled, both the House, the Senate, and the White House, all under one party, and one would assume that they are all unified. One would assume. Okay, now I'm not gonna get into that part of it, but you know, politics is politics. So that is one thing to consider. Now, all of that sounds great on paper until you actually start to look at the international piece. How has this played out in other places? We have seen a country like Germany, who had a very similar credit of close to $6,000. They took it out and said, hey, you know, y'all been buying cars, we got some other stuff going on, let's save money, right? Reduce the deficit, not spend so much, which is what we're trying to do here in the US. Let's just get rid of the credit, y'all will be fine, y'all know what electric vehicles are, blah blah blah. They saw sales fall precipitously by a lot when it comes to electric vehicles. That could happen here as well. And who is that going to hurt the most? Well, stock wise, that could hurt Tesla. Now, Tesla will still be the largest player, obviously, but from an investor perspective, that could be something that may not be all that great. Remember that for a lot of people, we don't have the best memory. And I know saying remember that we have a bad memory doesn't really go together as the best sentence. But for example, right now, and I mentioned this at the very top of the video, Tesla does have 140% gain in the last 6 months. Zoom out over last year, it has close to an 80% gain, if I remember correctly. However, there were points in this year where Tesla was down close to 30 or 40%. There was one point where it was the most disappointing stock of the year so far, right? Tesla is, I'm not going to call it a yo-yo stock, but there are times where this stock will ebb and flow based on how people feel about Elon, myself included, at times. We don't know how this stock could react, even though there are times where Tesla will do quite well, producing vehicles, being profitable, and the stock still not do well and will sink, you know, by leaps and bounds, even though it should do much better than what it should do much better, but because of what Elon may be doing online or elsewhere, may not necessarily respond. So keep that in mind. But here is the other piece that I found interesting as well. In Germany, it didn't work. Okay, they took away the credit, the stock still fell. However, cars are still a necessity. I don't know if I would call them groceries per se, like something to that level of a need, but when you need a car, and obviously you have the means to buy a car, whether it's new or used, right? You do need that car, and you are going to have to buy that car. Again, if you have the means, so on and so forth. Whether you have the credit or not, you are still going to have to buy it. For example, my wife and I are going to try and look to get her a car at the end of 2025. So we're thinking like Q4. I don't know if we're going to go electric or not. We'll see. Now, hopefully, if we go electric, I hope we still got that credit. But even if we don't, we still got to get a car. So whether we have the credit or not, because like a lot, think of the phrase, until the wheels fall off. Well, when the wheels fall off, you got to get a car. So what's going to happen at that point in time? I'm going to just sit around and wait for a law to be passed and hope that a credit does X, Y, and Z? No, I'm going to buy a car. And it's either going to be a Tesla or not, or is it going to be an EV or not, or whatever it's going to be. So that's the other side of this is, end of the day gonna end. No, seriously though, at the end of the day, a car is going to have to be purchased, and if it's going to be an EV, it's going to be the one that already has the market share, already has a network, and already has all the advantages of electric vehicles, which is Tesla. And the main thing is, if you've driven an electric vehicle and don't already own one, Tesla is the best one out there because they have the network. I've driven other electric vehicles just to get my understanding of it, not just from the analyst of the stock side of things, but more so just to understand it. Because at some point, we're going to transition to electric vehicles. I might as well kind of get used to it, right? Tesla got all the charging stations. Most, not literally all of them. But You get some off-brand Kia or whatever electric car, they're gonna have you off in the boonies to a charging station that probably doesn't work, and you might be stranded. You could literally be stranded in some podunk town in the backwoods of Georgia. Tesla will have you, it will just automatically navigate you with a very easy system, and you will have charging stations almost everywhere. Which ones, especially if you got kids or people with you, which ones would you prefer? The one that you know that you can depend on when you got a crying kid in the back, or you want to take your chances with some no-name car? If it's me and my family, I might have to go with the Tesla. And it's not to say that Tesla's perfect. Y'all know how I feel about the stock. I hold it, but I'm not the biggest fan. So it may actually help Tesla even if they get rid of the credit. As a consumer, I would prefer to have it. I think as a consumer and from the broader economics part of it, I think it is best for consumers to continue to have the credit because it gives us more choice and options. I would prefer to have that credit because if it opens the door for Rivian to continue to innovate, if it opens the door for Lucid to continue to innovate, I would prefer to, those are just the two that are in my mind. I don't know if Lucid is affordable for most people, myself included, but I would prefer to say I can look at a Ford F-150 electric or Mustang electric vehicle, look at Rivian, look at Tesla, and compare 4 different EVs versus I only got one in one manufacturer and nothing else. I want to have options. And I think those options will force those competitors to fight each other to make the best vehicle for everybody versus only having one. But when it comes to the investor perspective, which is what we are here for what we know now today, and we don't know what the tax law is going to be, either way, I would say that Tesla is still something worth buying in either case. In either case, because with or without the credit, Teslas should be fine. They should be fine. You give them the credit, or you keep the credit in place, they're going to do what they always been doing, which is still dominating the market, especially for the next 1 to 2 years. I don't think it's going to change in 10 years, but in the next 1 to 2 years, they should be fine. You take it away, and I would say their market share is only going to expand, which is even wild to consider. So I don't really see that changing. What I would say is if you do buy Tesla, the main thing is this: be ready for those ups and downs. The way I've had it in my portfolio, so I bought it, I left it there, I kind of tuck it away and don't look at it because those swings can be quite, violent at times. And moving into 2025 and really over the next 4 years, that relationship between himself and the president-elect currently, those are 2 interesting personalities, and they can do and say some very interesting things, and we are in some very interesting times, and they will, both of them, will move the market. Hopefully it is in our favor, but what you don't want to do is overexpose yourself and put yourself in a position where somebody says the wrong thing, and that hurts your pockets, right? So I do think it is a good investment because regardless, you should be an investor for more than 4 years, right? And you should be fine for the long term. Remember my 5% rule if you don't know what that is, or you want some other stocks to consider if you're not necessarily on the Tesla boat, then you want to check out these videos right here.